Philippe, I wonder if anything on that call yesterday was enough to make you feel like this is perhaps a bottom in place for Tesla, that it can have some more upside move, and that the path of least resistance has been cleared so it can resume a march higher.
Yeah, no, absolutely. I mean, I think a lot of things could go wrong in Q2, and a lot of things did go wrong. And we had the margin compression that we expected because effectively the most profitable plant, Shanghai, was out of production for a good chunk of the quarter. And then Austin and Berlin are incurring ramp-up costs, so effectively they dilute the margins. So overall, the almost 400 basis point of gross margin we lost was well expected. I think some of the good news was, they told us in the quarter they had about 1.1 million, a bit less of installed capacity. That number is now 1.9 million if you start looking at the capacity built in Austin and in Berlin. And they produced 1,000 cars a week in Berlin sometime in the quarter. So this points to a ramp up of the production that should be probably faster than what I was expecting and faster what most people in the market were expecting between now and the year end.
So Philippe, what's then going to be the key to making sure that stock is catalyzed to the upside going forward? Is it going to be some of those Chinese numbers about production and sales out there? Is it something with regard to inflation easing and profit margins, not just here at home, but elsewhere as well? What's going to be the kind of key to kind of get this whole thing in that investment thesis back opened up again?
Well, I mean, the business is still capacity constrained. Of course, I think Musk mentioned that, there was some, waiting time 6 to 12 months. And it's not a goal in itself to get your customers to wait 6 to 12 months to get their product. So, this is very much a production constrained environment. At the same time, Musk has been very clear for a number of times about how critical affordability is. And of course, they raise prices, you could say, because they could afford to. The demand is very strong. At the same time, at some point, if the inflation environment eases, Musk repeated yesterday that he was considering, at one point they reduce prices to continue to make the cars more affordable, because that's what the goal is. The goal of Tesla is to make that transition happen as quickly as possible towards clean energy. And for that, they need to start lowering prices. And I think that was kind of the message that he did not indicated he would give up on margin, but he certainly would indicate he would give up on price if inflation starts easing towards the end of the year as is possible.
All right. And Philippe, before we let you go, this is just anecdotally because I'm a lay person. I'm not an auto analyst like yourself here. But I go around town and I see, it used to be just I saw Teslas everywhere. I've now seen a handful of Rivians on the road near where I live. Yep. I've just saw my first in-person real life Lucid Air driving around town. I've seen Hyundai Ioniqs around. How much is that competitive environment going to be a real headwind for Tesla in the coming months?
Well, of course, as consumers, we have more choice, and it's important. If Tesla doesn't lose share in this EV market, then there's no market. So I think we need to be aware that, of course, Tesla has to lose share if the market grows. We need to keep in mind also, so as consumers, we have more choice. What still makes Tesla unique is the amount, how much they redefine the industry, how they sell their cars, how they develop their cars. A theme in the earnings call yesterday was simplicity. Everything in the auto industry is complex. Everything Tesla does is simple and therefore efficient. And those are the edges that we need to focus on, not the fact that, yes, there's competition. Of course, there's competition and it's welcome. Otherwise, there wouldn't be a market.